Who's right? Who's wrong? You decide. Hash it out with Frank Garay and Brian Stevens. Brought to you by Remen Wholesale.
Hello, welcome to Hash It Out. I am Frank Garay here with Brian Stevens, and today I have a question for you, sir. Okay, last week we talked about on the National Real Estate Post that there's some new legislation that might be getting pushed through here that would allow loan originators that work for depository lenders or federally insured banks, right, your Wells Fargo, B of A's, to move on and leave that type of a company and go to work for like a mortgage broker or a mortgage banker that doesn't take deposits, okay? And they'll have a 120-day grace period where they don't have to have their licensing done. They can be working on it for that 120 days and still originate loans, perhaps with disclosing, hey, I'm not licensed yet, to the consumer. My question to you is do you think that you'll have this, if this goes through, do you think you'll have this mass exodus of loan originators out of the banking world, the depository banking world, into the non-depository world?
So you basically get to test drive it if you choose to.
Yeah.
The real question is how many people are going to want to go through the additional licensing requirements? I think that's going to be the biggest thing that's going to hold folks back.
Right.
Because you're going to actually have to do more work, and people generally don't like to do work.
Okay.
And if you're not struggling where you're at, people are very comfortable being mediocre.
Sure.
I hate to say it, but it's kind of true. However, I will tell you this.
What?
I think there should be a mass exodus from your larger depositories towards your regional bank for a variety of reasons. One of them is, in general, you're going to be able to keep more of your commission if you're working for a regional bank or a broker than if you work for one of the bigger banks. Of course, you're not going to get the leads that are fed to you like you would at like a Wells Fargo or one of the brands out there. So that's what you lose is a little security, but you gain much more autonomy. And I think anybody who really sees himself as a salesperson out there and wants to embrace the community, I just think there's a lot more allure and appeal to the regional banking platform or the broker platform than you're going to find with one of the big boys. Working for one of the big boys is kind of like a 30-year-old still living with mom and dad. You like the security and you're afraid to fly the coop, but eventually you need to become a big boy and you need to go get your own place, and that's what a bank or a regional bank or a broker offers.
I don't know, man. I think, I did work with the big guys for a while, and there is just a different mentality with the guys that choose to work with the big banks.
But you hated it. I've had this conversation.
I grew to hate it. I went there, it's true. I did go there trying to embrace what it meant to work for the big guy, to be that guy that worked with the Wells Fargo, who I work for, because, and don't get me wrong, I knew guys when I was at Washington Mutual for just a brief moment, right? There's a guy there making $3 million a year, a loan originator. And even at Wells Fargo, they had a gal that was knocking them dead, making $3-4 million a year. You can make an enormous amount of money as a loan officer working for one of these banks.
Right.
But I think that there's a different mentality that goes on. And I think a lot of these guys, when they go there for a reason. And one of the reasons that they go there is something you're kind of kicking there, but it's what they embrace, which is, I like to have the brand. I like to have the stagecoach. I think that's important for me. And also, here's the other thing. When you talk about the pay, getting a little more pay, really honestly, if you hash it out, even though you might be getting a lower commission over at the bank, which you typically are going to get, okay, the benefits that come with those guys, if you translate that to cash in your pocket, what you would have to be paying for,
right,
to get the same deal, you're probably making about the same money. I got incredible medical, incredible dental, and retirement.
What about the rates you're selling?
That's true. You got to overcome the rates. Now, the truth is that the rates were higher. My rates were definitely
higher. And that
higher.
might not be the case right now. We're not over here to try to just, kick around Wells Fargo right now. It might not be the case now, but that was your experience.
That was my experience. The rates were higher. We learned how to overcome that. You're a salesperson. Everybody can overcome rates. We teach that all the time. You're not selling a rate. You're selling who you are or whatever. But I just don't think that there's going to be this mass exodus, of people over there.
I don't think so either, but I think there should be. It's just kind of, general philosophy in life. If, you ever wanted to try something, but you didn't know if the outcome was going to be good, at least you can check that off the list of the things that you wanted to do. Even if you were to go from one of the big boys over to a broker, you think, this might be good or bad. If you hate it and you fail miserably and you're a good loan officer, it's not like they're not going to take you back.
Right.
So I would think that, in the spirit of adventure, you would find some people just trying to see if the green, in fact, is...
If the green, in fact...
trying to find out if the grass is in fact greener on the other side.
Yeah.
But with all that said, it probably isn't going to amount to a hill of beans. I will tell you this though: if I ran a brokerage shop, or if I was in charge of a regional bank
Sure.
or recruiting, I would use this as a massive opportunity to go to the big boys and try to recruit and pull them away, because you will get some.
Yeah. Well, I guess the question for you guys is what do you think? You know, do you think you're going to see this? And more importantly, if you are with a federally insured bank right now, would you take the plunge? Would you give it that 120-day test drive if this gets passed? Would you do that? Let us know in the comments down below. And with that, you guys have a great day.
Like I said, you know, you wouldn't buy a pair of shoes without trying them on first, and you would never marry a girl with it. Have a good day.
All right, you guys have a great one. We'll catch you here next week on Hash It Out.
Bye.
Bye.
Today's Hash It Out was brought to you by Remen Wholesale. Hash It Out airs every Thursday at 7 a.m. Eastern Time and can be viewed on MortgageNewsNetwork.com.
This is Mortgage News Network.